Hey Slopers, Brian Johnson with thestockminer.com here to do another video for you. Have not put in my 2 cents yet this week, so I'm going to do that here before Friday hits, especially with job numbers coming out. Not much to say actually this week. Markets have been sideways the last few days, so I hope you've been looking for stocks to trade because the ETFs have been all but useless to try and trade. All right, so coming into really the big news is unemployment numbers tomorrow and where are we going to go and where, okay, the markets are going to do what they're going to do. They're going to, whatever. They're going to move up, they're going to move down, doesn't really matter. I'm going to blow through the charts and then I'm going to talk a little bit to you about what I'm looking for in the morning as to what I'm looking for as a play for tomorrow morning's action. So here's the down to 60 minute. Last time we talked, I said, listen, breaking out over this is a bull flag. Breaking out over it is bullish. Now, we had seen it happen already on the NDX and the SPX. It had not happened on the Dow. It did early in the week and managed to dribble its way upwards and now moving sideways as the rest of the week moves. I will say this is still bullish behavior. It's hanging up here towards the top. It isn't dropping down, so the charts are telling me I should remain bullish on this market. As a disclaimer, I am short the market right now. I still believe that at this point there's more risk in holding long overnight than there is holding short overnight. So I have built a short position up. We'll see where it goes. If I get stopped out, it is what it is. I'll try again, but I'm still looking more towards the short side here. So call me bearish right now. But you can see we did break up. We did move over. That is very still, neutral to bullish action here to begin the week anyway. Now we're getting a little bit stretched. Still could reach this 10,500 area. This is the Dow's next level of overhead resistance. Keep that in mind as we push forward. That'll make a difference in how we play tomorrow. Here's the NASDAQ on a 60-minute. Big move up, moving down in a bull flag type of formation. Now coming back up to retest these highs. This is also its next level to get over this 1860-ish on the NDX. I like the NDX. I like using just the 100 strongest in the NASDAQ. Just to change it up a little bit. SPX on a 60-minute, same thing here. 1125, moving down, but now poking its way back up again. This is still bullish behavior. Staying sideways like this is bullish behavior, and anything above that takes us back to probably 1130. That's my big line in the sand here. We get over 1130, and I just have to start looking back at the 1150 mark for the next big area of overhead resistance. So, now, that was quick. What am I looking for coming in tomorrow? All right. If you are bullish, what you would like to see is a gap up and over this 1130 area or any of those other stronger overhead resistance areas on the other indices. Okay, so I'm going to play with the SPX because that's where I'm at, but apply this to any one of the other indices. When you cannot get over an area of strong overhead resistance, what do? You just gap. You just gap above it. It's the easiest thing to do. You gap above it, then when you come back to retest, if it holds there for any length of time, that usually means it's going to continue and roll upwards, and we may see that tomorrow. If we get a gap to 1132, 1133, and it comes back and holds at 1130 for any given length of time, the bears are going to go, yeah, whatever, I'm out, whatever, save my money, and they're going to cover, and it's going to start to run this price up. So watch that carefully tomorrow. If you're bullish, that's what you're looking for. If you are bearish, ultimately this is what you want to see. You want to see it gap up, but maybe not make the 1130 area. Maybe it gaps up to 1128 or 1129 in the morning. And that way, maybe this overhead area holds. We create another gap below us to be filled, and maybe we see that gap up and then run down for a majority of the day or most of the day. I'd love to see that with my bearish positions. May or may not happen, but in Brian Johnson's perfect world, that's what would happen. Now, those are my scenarios. You might ask, what about a gap down? I'm gonna tell you, I really don't want to see a gap down. I would much rather it gap up just a little bit and or start the day sideways, because remember, sideways can happen. Everybody's talking about a gap up, gap down, whatever, but nobody's talking about the fact that we could open flat tomorrow. Maybe unemployment rate comes back as expected and the markets go, yeah, well, that's kind of what we thought, no biggie. That could happen. All right, so keep in mind that and that we could open sideways, and I would really prefer we open sideways or maybe up just a little bit. on the numbers tomorrow, because to be honest, if we're going to start to head down, and I mean way down, like this is it, this is the third wave that we've been hearing about from people. Oh, the big third wave down, blah blah blah. All right, if that's really going to happen, and that's what this is, there's a good chance that we may not see this level for a very very long time. And if that's the case, honestly, I don't want any open gaps up here. If the Bulls want to leave gaps on the way up, great. That gives the Bears something to fill on the way down. But I would prefer if we didn't see any gaps up here. I'd love for it to open flat or up a little bit and then run down and fill all the gaps, but not leave any gaps up here. We gap down tomorrow 10, 15 points and start to run downwards. I'm always going to be asking myself, when are we going to fill that gap? Are we going to fill that gap? Blah, blah, blah. And yes, I know these gaps can stay unfilled for months and years at a time, but you know what? In my perfect, bizarro, strange little world, I would love to see no gaps up here. Open sideways, open up a little bit, run down, leave no gaps up here. And that way, when we go down, I can feel content in the fact that we really don't have any gaps to fill up in this area. Let the sucker run. Just let it go. If it wants to gap, great, but do it where it works best. Something like in the middle of a third wave down. So this would be the third wave down, and then have wave one of wave three, then wave two up, and then wave three, and then a gap there. That'd be great because that gives wave four a place to come back and find its resistance at. But I would just prefer that we not see any gaps left up here. So there you go. There's my 2 cents on the deal. I'm hoping for a flat or maybe even a slightly gap up tomorrow open. Come on, baby, because I don't want to leave any gaps sitting up here if you're really bearish on this market. Let it run. Let it run down and leave nothing up here for the Bulls to look to cover or look to fill when they move back up again. Okay, guys, we'll see what happens in the morning. And safe trading to you all. Talk to you again soon. Bye.